Hey traders, head and shoulders pattern is a very classic price action pattern, and it is applied by many traders to catch the market reversal, the trend violation, and it is actually quite easy to spot this pattern. You just identify the left shoulder, the head, the right shoulder, and here's the pattern. But the problem is that many traders incorrectly apply that in trading. Many traders don't know how to properly read this pattern, and for that reason the pattern trading fails. And in this video I will explain to you how to properly read this pattern. I will try to explain to you how to read that with the price action. I will try to explain to you the rules behind the pattern so that you could get how to properly apply it. Don't forget to like this video, subscribe to my YouTube channel, and let's start. In order to discuss head and shoulders pattern, we will analyze gold chart. Here we'll take 12 hours chart, and here we will follow the price action. Remember that head and shoulders pattern is the price action pattern. For that reason, you should properly identify the price action legs, the swing moves. And here we will start drawing of our impulses from that structure low. Why? Because it is the current structure low, and from that point we saw quite impressive bullish movement, and with this bullish movement the price managed to violate this local low high level. So we consider this move to be quite exceptional. So from that point we saw strong bearish rally. The price reached that point right here, local structure high, and from that point we saw the retracement. The price retraced, and here the market sets a high low. After that we see a bullish continuation and new higher close. So once we see the market sentiment like that, we say that the market is trading in a bullish trend. Yes, according to our price action rules, once we have a higher low and a new higher high, for us the market is trading in a bullish trend. And for us it is crucially important to remember that with these rules the market will remain bullish to us until the price is trading above the last higher low level. And so far you can see that the price perfectly respects that level. Even though the swag went a bit lower, we need the candle close below, yes, to confirm the violation of the trend. But for now, this entire area is the so-called bull zone. Yes, and we expect that bulls will start pushing the market from that structure. Then, if we follow the price action, you can see that after the price reached that structure high, we retraced. And here we set a new higher low again. Then we saw the bullish movement, and this time the price sets a low high. Here the first time we see the low high, and after this low high was formed, the market retested our last high low level, setting the equal low. So right here, based on our price action analysis, we see the head and shoulders pattern. We see the completed left shoulder, completed head, and completed right shoulder. Now let's discuss how we properly read this pattern. Hey traders, if you want to learn price action patterns, if you want to learn head and shoulders, if you want to learn to spot it and to properly trade it, you will definitely enjoy my premium educational group. During the live streams with my students, I analyze the market live. I spot the patterns, I trade them, I teach how I make predictions with them. You can actually look inside the group on my website. It is vasilytrader.com/private group. You will definitely enjoy the group. It is very practical. If you don't understand something, I do the live Q&As with my students. So I actually look at the chart, I show the trade, I show the setup, and if you don't understand something, you just ask me and I immediately answer. It is very practical. For more details, check the link in the description or text me in one of the social networks. Let's continue. What do we know about the head and shoulders pattern? The pattern itself is the reversal pattern. And here's a very big problem with reading the patterns. I know that many especially newbie traders, once they see the completed head and shoulders pattern, they say that the market is reversing. They say that the market right now is bearish and it is time to short. And for them, once the pattern is completed, they simply sell the market from random point and they expect a bearish continuation. But it is not the correct way of reading such a pattern. As you remember, we started with our classic price action rules, and with our price action rules, we determined that for now the market still remains bullish. If the market is still bullish, is it reasonable for us to sell the market right now? Of course not. We got the contradiction. And moreover, the price can easily bounce from the last high low level again and go higher. It can, for example, start the consolidation, or it can set a new high. We don't know. Yes, for now it is not clear. The market remains bullish to us, first of all, and the bias remains bullish. But what happens once the price violates the last high level right here? And here, by the way, let's add one more term. Here we have the so-called neckline. The neckline that unites the lows of the head, of the shoulders. Yes, it's quite strong support from where the price bounces. So what happens once the price violates the neckline to the downside? What happens in case if we see such kind of a scenario? First of all, here we will get a new structure low. Yes, we will get here a new lower close. Now pay attention to the details. Here then we will have our initial high. Then right here we will have the lower low. Yes. Then here we will have the low high, and here we will have a new lower close. So once we see the price action like that, the market will be bearish to us. With our classic price action rules, it will signify that the market violated a previous bullish trend and it started to trade in a bearish trend. Yes, so that is how the pattern actually works. Yes, it gives you the preconditions for the trend violation and trend change, and the breakout of the neckline and new low actually gives you the trigger that the trend is violated and the market is now trading in a bearish trend. Yes, that is how we read such a pattern. And only when we see the conditions like that, only then we are predicting that the price will drop. Once we see the violation like that, once we see the breakout, then the neckline serves as the sell zone from where we actually expect a bearish continuation to the closest structure. And our closest structure will be right here, our current structure low. So you can see that the pattern itself is very conditional. We apply this pattern with the conditions, with the breakout condition. Yes, we need this price action rules to tell us that the market is bearish. Yes, don't make a very common mistake, which is shorting the pattern once it formed. Pattern itself is the warning sign, but the breakout and new level low is the trigger. Right, traders, thank you so much for watching. I hope that right now you know how to properly read the head and shoulders pattern. Now apply the price action rules. Read the price action, follow the price. It really makes sense once you properly identify the impulse lags, once you know the main rules. So apply them in practice and you will see how efficient they are. For more education, for live streams, don't forget to check my premium educational group, the link in the description below. Like this video, subscribe to my YouTube channel, and I will see you next week.